Hi, I'm Jimmy. In this video, we're going to look at Nike stock. So we're going to start with a quick look at Nike's business. Then we're going to run through some of their numbers. Then we're going to try to come up with a fair value for Nike stock using discounted free cash flow. So the first thing we may notice when we look at Nike's actual stock, well, the stock's down about 25% over the past year. So perhaps there's an opportunity there. Now, jumping over to their business segments, well, we can see here that they actually have three different segments that are traditional Nike brands. Both it's footwear, apparel, and then equipment. And finally, they actually own 100% of Converse. They have controlling interest in the Converse brand, but that represents a fairly small number relative to the overall pie. Now, footwear is by far their biggest source of revenue, generating a bit more than 2/3 of the entire revenue for the company. So, jumping back to the Investors Grow website, by the way, if you're curious, this is a new website we put up. We're constantly adding things to it, trying to make it better, trying to add new features. If you'd like to get access to this, link in the description below. But in the meantime, this is a chart of Nike's revenue going back the past 20 years. And clearly, the trend has been good for Nike. And then jumping over to net income here, well, net income has also done fairly well, although it's been a bit more volatile than revenue was. And then when we jump over under our ratios and margins tab, well, this is our gross profit margins chart for Nike stock. And we can see over the past 10 years or so, it's been impressively consistent, right around 45 or so percent. Now, just so we're on the same page, gross profit margins is after the cost of, let's say, selling, the cost of selling and the cost of actually making the goods. So in the case of Nike, after making the shoes, the apparel, things like that, what is that profit margin after that? Well, we can see it's been about mid 40% for a long time. And then when we drop down a level, well, this is operating profit margin. Now, where gross profit margin looks at the sales of the high, let's say to the wholesalers in general, the next level looks at selling general administrative. Now, you may notice that this number is far more volatile than the gross profit margins were. One of the reasons for that is back in 2017, Nike really started to make a push to go more direct to consumer. Now, they have been selling direct to consumer since like 2011. As far back as 2011 were some of the early numbers that I could find. But in 2017, they really started making a more deliberate push to drive up that part of their business. And we can see that in 2017, operating profit margins started dropping a decent amount. Then 2020 happened. That was kind of bad. That was the low there. Well, after 2020, things got, let's say the consumer got a little extra cash thanks to a lot of things that the governments did, and Nike came back fairly strong. But since then, once again, the numbers have been pulling back slightly. So we're going to come back to this in a second because Nike has since then tried to update their strategy for how they're best going to grow going forward. But before we get too far into that, let's look quickly at net profit margin. So much like operating profit margin, net profit margin has been somewhat volatile, although high single digit, low double digit numbers consistently over the past decade. So it's not too bad. And this brings us to the updates that Nike's made recently on their overall strategy. So a few years back, they started focusing more on direct to consumer. And overall, I actually think this is a fairly good thing. That should help them increase their profit margins, increase free cash flow, and ideally increase the stability of their underlying numbers. But what happened is, as the economy has struggled, as interest rates went up, especially recently, well, Nike, I think, began to realize that they were a bit more exposed to broader economic factors than perhaps they originally realized. Because they had pulled out of some stores, let's say stores like Dillard's, which was previously a wholesaler for Nike. Basically, Nike would sell to Dillard's, Dillard's would go ahead and sell to the public. Well, as they were trying to go more direct to consumer, they started pushing out some of their wholesalers. Well, recently, when I say recently, I mean in 2024, Nike's made announcements on some of their analyst calls. They talked about the fact that they were going back towards the wholesalers. Now, I think that this is a good thing overall. I do think that there is room for both lines of business. direct to consumer and wholesalers. Many people want to go to stores like Macy's or Foot Locker or Dillard's and shop all the brands and have Nike be one of those choices. But there are many others that want to go directly to Nike and perhaps get the best deal that they can, or just know that they're buying the product directly from Nike themselves. I do think that there's room for both. But that being said, let's jump over and look at the potential fair value for Nike stock and see if it's worth buying today. So when we jump over to the fair value tab on the website, well, we can see that when we go out the 10 years, so basically we extend free cash flow, the green bars are analyst estimates. That's the numbers that analysts actually think we're going to have for free cash flow. And then we have the computer calculate a few additional years, kind of smoothing out the growth over the next decade. Well, when we do that, we end up with a fair value of about $91 per share. We already saw that the stock is down about 25% to about $93. So right now it looks like Nike, despite the enormous pullback, continues to be a bit overvalued at the current price. So for me, on a personal basis, while I think Nike at the current price looks interesting, I'd like to see it fall another 10 or 15% before I really consider jumping into buy a stock like this. This is an industry that is highly competitive, an industry that Nike has to stay one of the leaders. They already have one of the best brands, but I think that they're going to have to get back into the good graces of the wholesalers while also sorting out how they're going to continue to push growth in their direct-to-consumer business. Early on, one of their growth strategies was to push in countries like China, but the growth over there hasn't been quite as good as they thought it was going to be. So some of their numbers might be a bit more muted than was previously expected, which partially explains the pullback in the stock. So for me, on a personal basis, I'm actually going to add Nike to my bullpen and sit there, and with any luck, we'll get a pullback in this stock and find a good price to jump in and buy this. Ideally, 10, 15% lower from here. So again, if you'd like to get access to this website, I will leave a link in the description below. And if you want to learn how to analyze companies, I did a video called 8 Steps to Analyze a Stock. That's right there. Thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.